Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Friday, February 24th, and we are rounding out a short week in the US markets, but definitely an impactful one. Unfortunately, we did get hit with a higher than expected PCE print, and I don't know why it's showing me next week's already. Let's get back. Here we go. So PCE came in at, or core, which is the important number for the context of this conversation, came in 0.3% higher than expected. So it came in at 4.7% year over year, as opposed to the predicted of 4.4%. So that was obviously a downside shock to the markets, as we described. So it was definitely in more of the extreme category. As we mentioned, yesterday we were talking, if it was tight numbers, maybe a quick reaction, but definitely a little bit more of an extreme number. So definitely not in the right direction. And I believe the markets are pricing in a 30%, over a 30% chance of a 50 basis point hike in the next FOMC meeting, which would certainly likely shock markets to the downside, and to start is at least pushing markets lower as they reprice in the possibility of tighter Fed action. So consequently the dollar rose higher as we predicted for such a PCE print. We did talk about a potential swing failure pattern lower, which could still be completed with moving higher. It doesn't have to swing back in automatically lower. It just basically has to fail in the next move and start dripping down. But I will say, if we start zooming out, this does look pretty strong. It did bust through the 1-day estimated 200 moving average with a pretty strong daily candle. Now, of course, we will need confirmation. That confirmation will have to wait until Monday and Tuesday to see what happens. But preliminarily, a strong break above something that has been resistance for several months, or not several, but a couple months. Certainly a good sign, seeing as it was also resistance support November, and then resistance in December onward. So very much something to consider here. So if you can confirm a break above 105.6, I think then you have a lot higher to roam. This is also, remember, support here, resistance here, traded around it here, and also resistance here, which is the top of the wick. So a lot of confluence around here. So I'm just going to go ahead and draw a line here, as I think this is the significant level to break. There we go. That's set properly. So this is the significant level to break, in my opinion. And you're basically kind of sitting in, what I would call a demand zone, very similar to how we kind of drew that on Bitcoin previously. So this is, the break above here, good first step. You'll probably either see some consolidation. What you basically want to see is acceptance in here, and then continue to move higher. If it starts selling off and gets rejected from this area, definitely not a good sign. So still possible for that swing failure pattern, but right now this does look strong. We'll have to wait until Monday or Tuesday to see what happens. We're also reaching over bought on RSI, but judging by previous history, that can definitely be a meme and not really matter in extreme scenarios. So definitely something we'll be watching for moving forward. Looking at equities, not a very pretty chart, being continuously rejected by previous lows. And this will close up shop very shortly, in just a couple hours. So we're looking at the 4-hour chart now, just to get a bit of a wider view on the market. Still thinking that 3930 number will act as support to some degree, as met the lows here back in December, briefly traded under it in January. So 3900 to 3930, I would expect to get some sort of action if we do drop there. Again, we are quite oversold on a higher time frame. And this is previous range, and we obviously have a lot of support in terms of trading 3900 and just below it. So this area I would not be surprised to drop into, just based on how ugly this wick is. Pretty strong rejection. Could still get above 3980. If we do, that would definitely be a positive sign, but we probably will not see prices above 39.80 until next week at the earliest. So if we close underneath 39.60, 39.55, then I think we'll start heading down to 39.30, potentially 3900 or 39.80, basically kind of this entire block right here. So, you could trade down here, tap that, come down here, and then maybe do something like that. Or, start dropping lower down there. So we'll have more time for that. But basically, I'd want to see a close above 39.80. And if we close below, 39.60, then I have a feeling that we'll continue to drop lower, and we may see, a lower futures open on Sunday evening. So looking at Bitcoin, the casino markets are, of course, going to be open all weekend. So what is going to happen? Well, had a decent reaction here at 22.8 off the estimated 200 moving average on the 4 hour. So we did break beneath that 23.3 level, tagged, estimated 200 moving average, which we've, defined its importance. We actually mentioned it yesterday. If this level broke, we'd probably see some support action on here based on previous reaction. So just because, one wick, formed off of it does not mean that, we're going to immediately bust through 23.3. So really the bull sign is, get above 23.3, close above 23.3, start, attacking maybe 24 or higher. But, based on how equities are closing and how the markets look, I wouldn't exactly bet on that yet. So, if you are bullish, you basically want to see this continue to stay above 22.8. You want to see strong rejections off of this, or it continually hovering above. If you are bearish, then, based on being rejected at 23.3 and likely failing at 22.8, probably going to head down to that 22.5 level. And then, as we described earlier, 21.3, in my opinion, is really the lowest, you can go before you start to get really tricky down here in this 20, I should say 21.3 to 20.5 level. So this is in the essence of, kind of a demand zone and how we talk about this. To me, this is like the final area of demand. If you lose this convincingly 20.5, then you're probably at least headed to 19, then potentially lower, because you've got all of this, barely any trading here, barely any trading here. So those are the levels you would expect, probably quick slices, if we were to get a reaction down there. So the in a best case scenario, we survive at 22.5. In a worst case scenario, we survive at 21.3, and then get on your knees and pray for 20.5. So basically, if you wanted to short, you could possibly target a 22.5 short, provided that this closes. And when does this close? This still has 3 hours to close, so I wouldn't exactly short it based on this 4 hour right now, but staying below 23.3 is definitely a bad omen. And as you can see, these hourly, strong hourly rejection off 23.3 as well. Still 20 minutes left in the candle, and I would still wait for a confirmation candle before entering another short lower. But again, if 23.3 does not survive, you're probably going to head down to 22.5. And so, if you were probably a safe scalper, then you would probably wait till it breaks below 22.8, catch that small spike, or maybe play a high beta asset like a short. Or, you see this, we close with a really strong wick down, or kind of a strong doji, I should say. And then you enter, targeting 22.5, or at bare minimum, 22.9. So, two small scalps there, one with a little bit more juice on it, but again, also oversold. We're going into the weekend, casinos open, equities are closed, so very much something to consider there. And 23.3 is the number to break to continue back into this previous range, potentially tag 24K or higher. So very much something to consider there. Oversold. You've got a short opportunity here based on 23.3 rejection down here. You've also got a long opportunity if it can break above 23.3. So take your bet there. Looking at ETH, 4 hour also, very ugly very ugly doji, I should say, forming. There's still, of course, several hours in this, but just quickly zooming down to the 1 hour, very similar to Bitcoin. Tried to test, some of this liquidity up here, 1630-ish, could barely get to 1625, and strong doji. And so, if this level were to fail, this is a bit more of a tough short, obviously probably going to move high beta with Bitcoin. So if you're short Bitcoin, probably a decent short on ETH as well. But what I would like to probably see is a close beneath 1600 again. And then, I think you could probably target maybe 1530. And for ETH, the magic number is a little bit harder. But, above 1600, I think, there's still potentially good signs happening. You do kind of have a bullish divergence here, lower price, higher RSI, that could also be a meme. It works. I find they work highly accurately, but nothing is ever 100%. So you've got, differing signs here. Above 1600, good. Bullish divergence on RSI, good. Forming, 1 hour and 4 hour doji, on a rejection from previous lows, from Tuesday lows, I should say, bad. So, differing opinion here. That's why I think it would probably be better to be patient. I wouldn't long this the way it looks right now. And I wouldn't short it yet because I think it needs to confirm under 1600 because, we had a great wick reaction here. Candle body closed both above 1600 and above the 4 hour estimated 200 moving average, probably prompted a lot of longs. Maybe those longs are getting squeezed right now. And so, then maybe, we could spend the entire weekend between 1600 and 1610 as well. We have seen very crab weekends, especially when people are scared. There's no narrative. And people are waiting for, the greater risk market equities to figure out what they want to do before crypto, which is typically high beta, moves next. So very much something to consider. I would not short until under 1600. If you can get above 1650, obviously really good signs, but above 1600, maybe you're ping-ponging between 1600 and 1650. Below 1600, you're probably ping-ponging 1530 to 1600. And then, you've got your demand zone down here to 1480 or 1500, I would say. But, we do have some action down here to 1480. So, basically lose this area right here and you're probably, elevator down back to near 1200, with some stops in between, of course. It's never just going to be straight down. But, pretty solemn picture right now, I must admit. But, at least the trades are pretty obvious here. So we got to look for our numbers. Otherwise, we got a bad PCE number. We have to wait to understand, Fed actions, which is going to take some time. We don't have the next Federal Reserve meeting until I think mid-March. So now we have to be patient, see what equities do, and see how crypto reacts to that. I will say the dump is not as bad as I expected based on PCE. And I am pleased with the initial reaction to the dump, such as, this wick here, especially where Bitcoin, caught, which was this estimated 200 moving average. And of course, we are beginning to get a little oversold, but would not be the first time we dropped another, 5% after, tagging RSI lows. So we've got a lot of data to show us both directions, in this particular setup can happen. So we will wait for the confirmation of those trades to take them. And of course, if Bitcoin and Ethereum are moving down, or you're set up, or you believe that there is a bearish setup for those assets, and you're taking it, then you could also play high beta assets, such as an altcoin, potentially an L2, another L1, DEX token, a gaming token, and also think about what narratives have gone out of style. Is not saying immediately take these trades, but is the AI narrative waning? Is the China narrative waning? Is the decentralized exchange growth, narrative waning? Are NFTs waning? So start to think about these things, especially if you are a bull or a bear based on the data that you have, and, pull together a small list and just say, if I think that this narrative is going to continue, or I think that this narrative is bearish, and I believe that Bitcoin and Ethereum are going to do this based on these triggers, then, you potentially have a list of high beta assets to to play alongside, a major or a more mainstream crypto asset, to, potentially create a little bit more, revenue for yourself, or maybe you play the high beta asset and you hedge with a major, which is done quite often. Sometimes it'll go the wrong way on you. Your hedge will help. And so, there's several ways to attack this market. Or you could do what I'm probably going to do this weekend and just take a break, monitor, prices, line out the levels, see how we react at the significant levels that we want, and then potentially enter or exit, some bets that were made in early February and in mid to late January. So that's what I'll leave you with this week. We have a full week next week, and we'll have a full slate of data. Actually, let's just go check out what data we have next week to think about for over the weekend. So nothing too crazy there. Nothing too. ISM manufacturing will be a bit important. Fed Kashkari speaking might. So we have a couple of. We have several Fed governors speaking as. We have Fed Goverson or Fed Gov Jefferson, Chicago Fed President Goolsby, Fed Gov Waller, Kashkari, Bowman, and Logan. So we basically got PCE. We don't know what the Fed is going to do, but March, I think 15th or something like that, 15th or 16th is the next Fed meeting. Next week starts the first week of March, and we have basically Fed governors speaking every single day. So we're going to get a bit better of a view of their opinion on what to do with rates and how to deal with, increased inflation next week, and we'll get that daily. So that should, if I was a betting man, based on this for next week, whatever lows that we form, I think, on Monday, because we've seen a lot of Monday selling. So maybe crypto, just ranges or whatever. Maybe we have a curt Monday sell-off. Whatever range we start to form there, as we start to get a little bit oversold, and maybe we tag 22.3 or something like that in Bitcoin. I'm not saying that's going to happen. I'm just saying if we get a bad Monday, then maybe we just start to form a larger range and we just start to react to different Fed governors and different information. The market's kind of reaching a bit of an equilibrium. I'm not saying that's what's going to happen, but since FOMC hasn't happened yet, usually that's the big volatility event. And we've got a couple weeks till then. And we've got a bunch of opinions of a bunch of people who matter, but their core voice matters rather than the individual ones because they make decisions as a group. So if you think about it that way, then, maybe we just range. Maybe we form our low early, early in the week, and then we just range for a couple weeks, tag some highs, tag some lows once or twice. And then FOMC kind of brings the big, do we go down, do we go up, or then do we continue to range? So if I was a betting man, I would bet on ranges happening next week, because I think that, the setup is right for it. If we're going to just really sell off, I think that'll probably be a 50 basis point hike from the Fed at the next meeting. Until then, market's going to go, player versus player and attack each other, sparring on the front lines type of deal, trench warfare. And everybody wants to trade the extremes. It's gonna, short everything, on the precipice of death, under 22.3. Long everything on the precipice of bull, which is, that 25 level. And, and everybody gets squeezed in the wrong direction. So I think, it's wise to think about, those high beta assets, like I said, so that you can have an intelligent trades, especially with hedges, or, take extreme trades provided the setup is there, as well as consider the fact that ranging may be the new play, at least for, a significant portion of March. So I'll leave you with that to think about. We'll obviously discuss a lot more next week. We'll dig up some fun charts and some fun ideas based on how Monday opens, or I guess Sunday evening into Monday opens. And we'll be back next week to discuss, what all these Fed governors are going to talk about and maybe where their opinions lie and how that may sway markets. So good luck. Happy trading. Speak to everybody on Monday.